the kinds of stocks you want, you've got two types of stocks you can own. There are only two types you can own for whatever risk appetite you've got. And listen to this carefully. They're the type which when they fall 20%, you're throwing up and you wish you'd never bought the bloody things and you need to get out of them quickly. And they're the type when they drop 20%, you think to yourself, brilliant. I love this company for all the fundamental reasons. It's going to go back up to all-time highs. I want to buy more. My portfolios are of the type where I want to buy more. I am not in the business of speculating and gambling where I think, shit, it's fallen. I will wish I had less. Okay. Now I can do that. It's called trading. Okay. But that's not what this lecture is about. Trading is not what this is about. This is about investing. Okay. So Apple's in that category, for instance. Okay. My Train Technology is in that category of, well, if it falls, I'll buy more. And I've got the data to back it up. That's the important thing. I've got the bloody data from the undervaluation, the revenue growth, the dividend yields, the cash return on capital invested from Goldman Sachs Wealth Management, the momentum from the hedge fund industry, and critically importantly, Sortino, average return versus downside volatility. So I know at any given moment, thanks to a very clever data analytics team, what's the probability if this has a down month of more than 5%, that it's likely to have an up month next month, and therefore I should buy into it. And they'll tell me there's a 75% probability that if you buy into this next month, it's going to be up at least 5%, and therefore you might even want to leverage the hell out of it. That's getting more into the trading side of things, but we can get that data. We look at it and we go, right, bang, those are the kinds of companies I want in my portfolio. And guess what happens when you've got those? You have no reason to panic. You've got no reason to get bored. You sit on your ass all day long and you do nothing. Because that's the obvious thing too. What do retail clients do? They love to look at CNBC and get panicked and worried because that's what CNBC wants them to do. Breathless headlines. Let's look at some of their breathless headlines. The biggest takeaways from what Truth covers and what's still unclear. Whole rate stays economy shows resilience. AI bubble fundamentals real. What to watch for as stocks soar. Well, there's a breathless headline. Okay. Shark Tank event. How entrepreneurs? Maybe not so much. They'll have something. It's usually around Kramer. By the way, of these biggest movers, I don't own any of these, and that's fine. You can still make a lot of money by not owning any of these. I don't own any of these, and that's fine as well. Okay, it is slow and steady, and as Buffett showed, you end up making a lot by just being the tortoise, not trying to be the hare. I know it's fun trying to be the hare. Okay, earnings coming out as well. So there's